Good morning. We will pay attention to the accounting equation today. We use the perpetual inventory system. That means every time inventory is purchased or sold, it will be recorded in the inventory account. A profit of 50% on cost price is maintained. That means if it's on cost price, the cost price equals 50%. Cash sales according to cash register roll, 21,000. As soon as goods are sold, whether it's sold for cash or on credit or debtors return goods, for those three transactions you will have two double entries for every transaction. A double entry at sales price and a double entry at cost price. Cash sales means that we receive money. So that means the bank will be one of the accounts that will receive the 21. Sales is an income, so income increases with the 21,000. So our first entry will be at the sales price. The bank account is debited with the sales price because that is the money that was received in the bank. Bank is an asset. Assets increase on the debit side, so assets increased with 21,000. Sales is an income. Income increases on the credit side. When we have income, the profit increases. Therefore, the owner will get a bigger profit, so equity will increase with 21,000. It is a cash register roll that was issued to the customers, and we use the duplicate in the cash register to complete the entries in the cash receipts journal. The information stated that a profit of 50% on cost price was made. If it's on cost price is 100, profit is 50, and the sales price is 150. The sales price was given as 21,000. If we want to calculate the cost price, the one that we want, 100, divided by the one that we know, 150, times 21,000, and that will give us the cost price as 14,000 rand. Cost of sales is debited because expenses increase on the debit side. Expenses will decrease profits, so the owner will get a smaller profit, so the equity will decrease with 14,000. Assets increase on the debit side and decrease on the credit side. We are selling inventory, so we are decreasing our assets with 14,000 on the credit side. The source document is the same cash register roll recorded in the cash receipts journal. Received an invoice from High Traders for 9,000 less 20% trade discount. If we receive trade discount or cash discount, we subtract it from the amount immediately to determine what is the actual price of the goods that we bought and to determine what is the price of the goods that will be paid by check. So we will work out 20% on 9,000, giving me 1,800. Subtract the 1,800 from the 9,000 immediately, and that will give me the purchase price as 7,200. What happened here? We bought goods. So if we buy goods, inventory will be the one account. We paid by check, so bank will be my double entry. Inventory was purchased, so inventory asset increased on the debit side with 7,200. The bank was decreased because we have less money in the bank, 7,200. We issued a check to the person, and the check counterfoil is a copy of all the information on the check. The bookkeeper will use the check counterfoil to record the transaction in the cash payments journal. Issued a receipt to the owner for 20,000. He paid the money in the bank of the business to increase his capital contribution. So the money increased in the bank, so the one entry will be in your bank account. The other entry will be in the capital account because he increased his capital contribution. The bank account is debited because assets increase on the debit side with 20,000 Rand. Capital will increase equity. Equity is the money that belongs to the owner that he invested in this business, or you can say that is the amount of money that the business owes the owner. If the business receives money, they give a receipt as proof of payment, and the money is recorded in the cash receipts journal. Services rendered 1,800. The one account will be services rendered, that will be an income for the business. You receive money, so the double entry will be in the bank account. Bank account is debited to increase the assets with 1,800. Services rendered is credited to increase income. Income increases profits, so the equity will increase because the owner will get a bigger profit. You will issue a cash register roll when you render services, and the entry will be recorded in the cash receipts journal. Paid the telephone account for calls made 300 Rand. You paid money out of the bank, so the one entry is in the bank. What did you pay? Telephone, so the double entry will be in the telephone. Expenses increase on the debit side, so telephone will be debited. If you pay expenses, profits decrease, so equity will decrease. Money was taken out of the bank account, so assets decreased with 300. This entry is recorded from the check counterfoil in the cash payments journal. Cash purchases of stationery. Money was taken out of the bank and stationery was purchased. Stationery is expense. Expenses increase on the debit side. That will decrease profits, therefore equity will decrease. Money was taken out of the bank, so assets is decreased on the credit side with 400 Rand. The entry is recorded in the cash payments journal using the check counterfoil. Obtain a loan from the bank. Money is paid into the bank account, so the bank account will increase on the debit side with 10,000. A loan was obtained. That is an obligation to the business that they will have to pay back in the future, so the loan account is credited to increase liabilities with 10,000 Rand. When the business received this loan, a receipt was issued as proof of payment that the money was received, and it was recorded in the cash receipts journal. Issued a check to buy a computer, less 10% trade discount. We subtract the trade discount immediately. 10% is 800 Rand. So this computer is actually costing us 7,200. Money was taken out of the bank, and in exchange for the money, a computer was received. So equipment increased assets on the debit side with 7,200. Bank, money was taken out of the bank, so the bank is decreasing assets on the credit side with 7,200. The entry is recorded from the check counterfoil in the cash payments journal. The accounting equation is assets equals equity plus liabilities. That means after every transaction, this equation must be equal again. So it means that if you increase something on the one side, increase assets, you must increase either equity or liabilities with the same amount. If I decrease assets, it means that I must decrease either equity or liability. So every time you recorded a transaction, you have to record a double entry, so you will have an effect on both sides of the accounting equation, or you can have, as in number 8, that assets increase and decrease because we are changing one asset into another. If we subtract the 7,200 from the positive 7,200, it's naught on the asset side and it's naught on the other side. So if you are unsure about an entry, after you recorded it, make sure that this accounting equation will still balance after completion of the entry.